And let me throw this one in there too. Because like you say, Bitcoin is built to handle attacks because that happened 3 years ago when it hit its all-time high. Then some people were, I think, in my opinion, were intentionally trying to say, oh, it's bad for this or that, the environment to bring the price down. And then what if there is so we have the halving, the price is going up. It's the summer, let's say, Bitcoin's at 150,000 or more. And then there's like a huge economic collapse in the States because America's headed for a nosedive. What do you think that would do to the short-term and the long-term price of Bitcoin? If Bitcoin is at that level of 150 or more?
It's going up forever, Laura.
What's going to happen to the price?
Yeah. Short-term pullback, and then
the pullbacks are steep, and they happen pretty regularly on these 4-year cycles.
Mm-hmm.
But it's higher highs and higher lows, and the annual compounding rate. Anybody that's held it for 4 years, 5 years is in the black. So the thing about Bitcoin is you can hold fiat money, and you're guaranteed no volatility, and you're also guaranteed loss of purchasing power. Or you can own Bitcoin, and you're guaranteed some volatility, and you're also guaranteed increase in purchasing power. So what the quid pro quo is, you will guarantee to increase your purchasing power against fiat over a 4 to 5 year cycle, guaranteed, mathematically guaranteed, if you're willing to accept some volatility. Or if you don't like volatility, use dollars, but you're also guaranteed to lose purchasing power. It's guaranteed. So this time next year, you'll buy 15% less with your US dollars, but the dollar is still a dollar. There was no volatility in the dollar. It's still a dollar. You can buy 15% less, but it's still, so congratulations, there was no volatility. Oh, by the way, Bitcoin was dropped 23%, 30%, and then now it's up 100%. And the purchasing power was up 100%. But it's volatile, I'm sorry. So that you pick, which would you prefer?
Yeah, I like Bitcoin.
Yeah.
No, because I mean that's the thing, and I asked that question for some people who watch the show are unsure what to do because they always talk about the price, and that's the thing I always try to explain to people. I say to friends of mine, I go, well, the $1,000 you made 3 years ago is worth less. Yeah. Because it's buying less, because the cost of value at the store, the price of gas, all those things in the States is worse than it's ever been.
Well, if you're really nervous about the volatility of the price, don't look at the volatility of the price. Look at the hashing power, which over time is consistently goes up every year. This has never really been in a bear market. And that's really where the risk takers are, and that's really the market. The volatility comes from the dynamics and the underlying economics of mining. I mean, just like in gold mining or just like in oil drilling, you overextend, you borrow, you do a lot of it, and then the price drops a bit, and now suddenly you're losing, you're not making payments, and then it's a self-feeding cycle, and then there's a crash. So that's like the underlying, they're still based on energy. Bitcoin is energy. It's based on the energy market. And the energy market is still prone to ups and downs based on human psychology and human emotion that's committing or not committing to the energy business. I think that in the case of Bitcoin, we have yet to see a player emerge that will be stunningly positive for both energy and Bitcoin, and that would be in the Middle East. We have yet to see a Saudi Arabia or a Qatar meaningfully commit to Bitcoin. And when we do, we're going to see a very dramatic price rise. And we'll also see a time when oil is priced in Bitcoin. All energy will be priced in Bitcoin. They won't be priced in any dollars or any fiat money because they'll all be completely obsolete. You'll be paying X number of Bitcoin for a gallon at the pump. Barrels of oil will be traded in X Bitcoin per barrel. Saudi Arabia will announce we've done X numbers of Bitcoin in oil production last quarter, because Bitcoin and energy are synonymous essentially. Bitcoin is energy. It's energy. Money is energy. It's stored energy. It's stored energy that can take us into the future. That's what money does. It gives you the ability to go into the future with your ability to be hopeful about the future, because you can take your money and go into the future, and then you have a linear path forward out of the confused present, because you have a future if you have something that has value in the future. If my gold is great at this, I mean, gold is great, preserves your wealth over time, and fiat money destroys your wealth over time. These different currencies and wealth preservation models have different attributes that are maybe good for over time, or maybe more or less portable, et cetera. But only Bitcoin gives you both time and space, mobility, and through time and space equally, because so that's what makes it unique in that sense. I fucked up that metaphor so badly, but gold gives you gives you time. I'll think of it before long. God damn it, I hate it when I start off with a sentence that seems so promising. And before long, I'm so lost in the swamp that you just it's like that show, Lizard Kings or Lizard Monsters.
Yeah.
Go into swamp monsters.
The swamp people or
Swamp
whatever.
people and,
whatever.
it's like, it's so deep in the thicket of Nowheresville with this sentence. I can't believe it. There's got to be somebody. Can somebody help me? Hello?
I got it.